In the meantime, it's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Aquiles Larrea, founder, CEO, Larrea Wealth Management, joining me here at the NYSE today. Good to see you.
Nice to see you as well.
How are you feeling as we see the S&P and the Dow hitting these new highs today?
I'm a little cautious right now. What I'm thinking first off is we might have a slight pullback of sorts, not at this particular moment, but probably within a month. We've seen stocks run up quite a bit, and I'm not a negative person by any stretch of the imagination, but we do need a pause, and we're going to see in certain sectors, maybe not the Magnificent Seven, but in other sectors, we're going to see a little bit of a pullback. But the overall sentiment remains positive, and we're going to keep making money that way.
All right, first up in your big three today, you have Caterpillar. Off the recent highs of 334, it has really a winning chart. 1 year, it's up almost 34%. Your thoughts on Caterpillar today?
You know, Caterpillar is one of those stories. It's become this growth story now. Before it was growth and income, people wanted to own it, to have that dividend and a high quality holding. Still remains the same, but what we're looking at around 8 to 12% on the upside in 12-month time period to 18-month time period. At the same time, we think that the infrastructure play, I'm starting to see in the Pacific Northwest, in areas in the South, that infrastructure is being used, and this is exactly their bread and butter. This is where they're going to be making money and adding to their overall earnings. We also think that versus a value play here, there's still a lot of run up for this stock and could go very well for them in the next 18 months.
All right. So, you know, and it does say Caterpillar likely to face some pricing uncertainty in the second half of the year, but I see what you're saying and seeing some positive possibilities ahead. Take a look at the Caterpillar chart, Ben.
There's possibilities in the chart as well, a very bullish pattern playing out across multiple time frames. And the depiction we're going to look at here, the price activity, very supportive of what Aquiles was just talking about, that bullish narrative. Let's begin with a very granular 5-minute candle chart here. I started out with a look at just the most recent price activity we've seen coming off the lows from this week. We were around 312 all the way up to 322. So recently adding about $10 on. Again, a 5-minute candle chart, which shows here in this instance, we're talking about, this is actually a 1-minute candle chart. We're talking about migration of value higher from 312 to 322. Bulls are looking for CAT to go vertical at this point. That means take out these recent highs that we saw and then form a new area of value at a higher level. That would really solidify that working assumption that value is moving higher and that we are trending higher. Let's take a step back because you're going to see a very similar pattern playing from a 1-minute candle chart. Price activity we've seen off the lows from this week, which is basically just this move right here on the right side of your screen, a very small blip on this radar. But take a step back, you're going to see an easily identifiable trend up from 223 back in November of 2023, last year, recently to 337, currently in a balance, which is forming around 325. So this is very supportive of this bullish narrative. Again, we're going all the way back to, we're talking the fall of last year. You can see migration of value to the upside. One more step back. I want to show you what's going on as we see a similar pattern playing out. But in this instance, we're talking a weekly candle chart. So trend up from the spring of 2014. We were balancing around 87. Current levels here, supportive of that bullish narrative. Wouldn't surprise me, though, to see something a little bit more overlapping, a bit rotational start to develop, maybe around this $300 level. And again, that would be what the bulls are looking for, right? They want to see value form at a higher level. That's acceptance of the price activity we've seen, that strong, high conviction move up as of recent.
Okay, so you are seeing some support for your thesis here, Aquiles, based on Ben's charts. Final thoughts here on Caterpillar.
Caterpillar is one of these stories that people look at it. It was a boring stock, not a lot happening there. We're seeing the exact opposite right now, where we're seeing it going up quite a big percentage every single quarter and every single year. We think that trend is going to continue. We think that the infrastructure play that we're seeing here, the growth in America is continuing, and that could be very well for the company going forward.
All right. Next up, let's talk about Hilton, which actually is hitting some new highs today, $203, or this week it looks like $203.29. At the same time, some of the price targets I'm seeing are actually below $200 from the likes of Macquarie, Deutsche Bank, BMO has a $203 target. So there's not a lot of upside according to some of the analysts here. What do you see?
We still see upside potential to the stock, but we're definitely going to see a resistance point quite soon because it's hit those yearly highs, all-time highs. So we're going to see some resistance, but we use that weakness as a buying opportunity, Nicole. We're also seeing a high-quality consensus buying from institutional ownership starting to increase. This isn't a stock where you're buying it for a day or so. If you're a trader, yes, but if you're an institutional owner or if you're a long-term investor, time is on your side. We see anywhere between 12 to 18% in an 18-month time period, but it is going to be, albeit slower. And we're going to go back to that resistance that we're going to see and use to see if we can buy more at that particular point.
Right. Did you mean 10% or 12 to 18%?
I'm sorry, 10%.
10%. I read your notes, and that's why. In 12 to 18 months. I know what you meant, Achilles. Thank you for that.
Thank you.
And Ben, your thoughts on this Hilton chart, please.
Yeah, Nicole, I'd have to agree with that assessment. When you see a long-term trend that's well-defined, like the one we're seeing in Hilton and CAT for that matter, I always jokingly say, but I'm serious, I mean, it's not Johnny one lot. As Achilles pointed to, it's quality, high-quality buying, institutional ownership, and that's supportive of the trend we're seeing here in shares of HLT. Take a look here. We've got a more granular time frame first and foremost, then we'll work our way up from 189, we're talking end of last week, all the way up to 203, exactly what the bulls are looking for. We're talking about migration of value to the upside, well-defined trend up, currently rotational, forming value, holding above this 200 level. Bulls remain in control as long as they're above this 198 area, right? That's the most recent area balance that we formed relative to the one that we're currently forming, testing the upper extreme, possibly about to break out here right now. But yeah, this is a market here that briefly paused on these highs, and it's got some momentum. As simply put, it's got zero rejection of these upper levels here. That's the way I like to describe it. Let's take another step back here and show you what's going on as we zoom out a little bit here, add some time on. We're going back to when the stock was trading around 146. We're talking balancing around 152, and you got another high conviction trend up with a breakout of balance. The market's now seeking value higher. The bulls want to see something overlapping, something a little bit more rotational form around this 195, above this 195 level, right, to form acceptance of this most recent breakout. But you can see the conviction, the big green candle, higher highs and higher lows, again recently up to 204. Let's take one more step back. I've got another chart marked up for us here to just kind of solidify the point that, again, if you're looking at price activity, from 44, we're talking recently above 200, currently in a vertical phase, an initiative phase, so we're breaking out of the range that we formed around 195 briefly. But again, a breakout phase here really speaks to some of the strength we've seen, continuation of the pattern, bottom left to top right, pretty easily identifiable. In this instance, Nicole, looks to me like the bulls are in charge here.
All right, got you. Okay, so at this point, you also say the bulls could be in charge here, so that supports your thesis. Any final thoughts there, and then we'll get to Illinois Toolworks.
I think that people have underestimated this stock since COVID came out. It has been one of the leaders in the leisure and the hotel industry.
Right.
So you have to remember there are 22 brands there, new brands that are taking over, so there's a lot of possibility for increased diversity of income.
And they've talked about demand expanding in luxury, so they have seen, even maybe people are talking about people pinching their purses, but they are actually seeing the demand and expansion plans underway as well. That being said, we'll turn our attention over to Illinois Toolworks. After its earnings, it had some heavy volume, had a gap down. Is there opportunity here?
Yeah, there's always opportunity with companies with high quality. You know, this has been a resilient stock in the face of adversity. We saw the drop. We saw that as a buying opportunity. We went in. We've been rewarded for that effort. We're saying that if we see another drop, that is another opportunity to go in and pull back. Any pullback is a buying opportunity to get back into there. A 12% move to the upside. We also believe that this company is very defensive in nature. So like an RTX, like a defensive contractor, they are a niche player. They have so many components, so many solutions that people use in everyday life that they're going to go forward, that 12% may be understated.
And they also announced the buyback. They plan to buy back about $1.5 billion in stock over 2024. Ben, take a look at that chart and the technicals there on Illinois Toolworks.
Yeah, Achilles, a stock that's resilient, right, and one that's trending higher. You are going to be rewarded for buying dips, and this is really followed in that pattern here. Taking a look, ITW, let's do a very similar assessment as we did with the other two names today. Start off with a more granular time frame, and you're going to see a very similar pattern playing out. Bottom left, top right, easily identifiable. Going back to lows from earlier this week, we were down around 245, 250, we'll call it. Look at this, all the way up to just shy of 260. And as we map it out and just establish again along the way up that, well, we've seen a trend off those lows from the end of last week. Bulls are looking for a new area of value to form around 258, and it looks like they're getting exactly what they wanted. Here again, as I was preparing the charts, we had just worked our way into this area, but again, you can start to see something rotational being established in a new area of value forming here. Take a step back. Let's move away from this 5-minute candle chart. I want to show you what's going on as we add a little time on. You're going to see a very similar depiction playing out, though. The move off the lows from last week, as shares back above the pivot, above 260. Now, this opens up the door for a retest of that January high that we saw up around 267. Here's that pivot on the chart, and you can see, look at this, we're just getting up and through that. See a couple key areas held here, the lows, and that's all holding above the reference point that the bulls are watching right now, 242 for that longer term trend up. Again, opening up a door for a retest of 267. They want to see us take that out, form value at a higher level in line with the trend we've been seeing on this longer term chart. A well-defined trend up from $60 back in 2013. Recently, again, 267. Currently in a bit of a balance here now, forming around 240. Now, this is kind of interesting as you look at this because here you can see this range around 240. Not a lot of vertical separation, right? It's more kind of overlapping relative to the range that we formed around 220. So it could be that this is just one larger area of consolidation. We'll call it around 230. I don't want to split hairs here, but either way, no matter how you slice it, again, another example of a stock that looks like, again, longer term, short term, and in that intermediate as well, the bulls remain in control.
Yeah, and this well-defined trend up. I like how you wrote that there. Final thoughts. Thank you for those charts. Ben Lichtenstein, final thoughts, Aquiles Larrea.
We are in an area right now where seeing this bullish run continue on the upside. A lot of stocks are definitely going to benefit from this, but at the same time, we have to be careful. We have to be strategic in the stocks that we're purchasing that have that ability to be resilient and to take that upside to the next level.
Thank you for that, and thank you both for the big three today. Always interesting to hear your thoughts and then check out those charts along with it. Thank you both, Ben Lichtenstein and Aquiles Larrea of Larrea Wealth Management, looking at Caterpillar, Hilton, and Illinois Toolworks today.